International Distribution Services. Ticker symbol is IDS. It's currently trading for £2.09 per share, and it was formerly known as Royal Mail, and the ticker symbol was RMG. So I started my position on the 21st of June of 2021, and I'm now 46% down. So I've lost a good bit, 43% on my actual position, and then the foreign exchange impact has lost another 2.3%. So it's not really doing good at the moment. But I think, to be honest, I'm actually going to put today's dividends in here now because it's looking quite low. So it pays a dividend twice per year, and the last two I received were for 6.7 pence and 10 pence per share. As the name suggests, it's a postal and delivery company, and it operates in the UK and also in Europe, and it has a presence in America as well. The two main businesses in Royal Mail are Royal Mail itself and General Logistics Systems. And the Royal Mail side of the business, this collects, sorts and delivers letters and parcels. And they also have a one price goes anywhere service on a range of letters and parcels to over 31 million addresses across the UK 6 days a week. And the second part of the business, the General Logistics Systems, that's a ground-based provider of deferred parcel delivery services in Europe and in North America. And this segment operates in about 41 countries across Europe. So they currently have 162,000 employees, and they're in the Air Courier Industry of the transportation sector. Quite a large market cap, £1.89 billion. PE ratio is 2.8. Current revenue of £12.71 billion. Positive earnings per share of 70 pence. And a nice dividend yield of 8.45%. And a rough gauge of the profits over the last year is 4.81% profit margin. And over the last quarter is 4.45%. The debt to assets ratio over the last year is about 50%, which isn't really bad. And over the last quarter is about the same. And Royal Mail's annual cash flow from operating is £1.16 billion. From investing is negative £759 million, and from financing is negative £832 million. Like a lot of stocks and ETFs and all sorts of instruments in the UK, it's not really having a good time at the moment. It's on quite a bit of a downtrend. So I bought in on the 21st of June of 2021, which is around here, and this is what happened since. But in all fairness, everything was very overpriced for quite a while. Outrageously priced by the sounds of it. And I seem to have started my portfolio at what you could call the peak of this outrageousness. So it's going to be quite a lot of red days, I'd say, for a couple of years. I think the UK is going to be hit first and the hardest, and then everyone else will follow, is my guess, but I have no idea, so we'll see what happens. International Distribution Services has a 52-week high of £5.31 and a 52-week low of £1.77. So this graph goes back to 2013, but the company was founded in 1516, so we can't really get the full scale of what the stock price has done since the company became public. But in my own opinion, it's one of those companies in one of those industries that the only way that this will be absolutely destroyed, I think, is if it's nationalized and the UK government decides that they're not going to pay anybody back for nationalizing the stock. But as we've seen over the last couple of years with all kinds of different unprecedented events, you never know what's going to happen. But I do think that with that dividend yield, now it does only pay twice a year, but anything over 5% is a little bit risky. But because the share price has been crashing and the UK in general has been crashing across all different industries and sectors, I'd say a lot of people who take advantage of these opportunities will be rewarded. Maybe not in the short term, probably in a couple of years, maybe a year. But I think there is a lot of opportunity in the UK at the moment. The dividend history, this is on dividendmax.com. This goes back to 2014, and usually with companies that pay twice a year, you'll have an interim and a final payment, and the interim, or the kind of halfway payment, is generally quite a bit smaller than the final payment. But as you can see, it's been growing bit by bit. They're trying to raise both of them by the looks of it. However, there's no real indication of what's going to happen going forward, because things seem to be quite rough in the UK in all kinds of things. Cost of living, cost of gas and electricity, mortgage rates, everything. So it's very difficult to project these dividends into the future. Now, I think it's dangerous to assume that what it's been paying before is what it will continue to pay going forward. But if you don't take advantage of opportunities, then you'll never know. But it is risky. So don't put all your eggs in one basket, as they say. So it's a short and sweet one today. But I think it's just one of those businesses and one of those very important, crucial services that's not going to go anywhere anytime soon. And I'd say the biggest risk to this at the moment would be that if you put money into it now, they may cut or suspend their dividends going forward, or just reduce them quite a lot. But you never really know. When companies start to struggle very severely, they have to make changes like that, lay off staff, cut the dividends, or completely suspend the dividends. So I wouldn't put my entire portfolio into international distribution services hoping for chunky dividends twice a year. But their debt is not too bad, 50%. You know, McDonald's has like 108% debt to assets ratio, and I doubt that's going anywhere anytime soon. And international distribution services has about an 8% dividend yield at the moment, and the share price is falling. So as always, you have to do your own research. This is just a very brief description of stocks that I hold, but I think there is quite a lot of opportunity if you're willing to take advantage of it.